All right, guys, what is going on? What up, man? Welcome to the stream. Welcome to Wall Street Wednesday, dude. Welcome to Wall Street Wednesday. I'm John Fibonacci. Just a big old fraud. Worst mentor on YouTube. Don't know how to trade. Don't know how to call price before it happens. I'm just ass, right? right? Just a big old fat fraud is what I am. So it's just funny. I commented on just commented on Dodgy's Twitter. Not that I wanted to get into all that, but you know, people just love drama, dude. You know, people love drama, man. Drop a like if you're here, if you're ready to learn something today, ready to review some of the things that I was looking for today. I still think New Zealand could trade lower. Want to get that out of the way early on, so that way you can't be like, oh, you never said anything. I still think New Zealand could trade lower, and we'll have to see. We'll have to see. So yeah, drop a like on the stream if you guys are ready to learn. If you are ready to learn. What's good? Willow, Sean, Felix, Lucas, 2020, Natasha, Stephanie, Naruto. Appreciate the efforts with the likes there. Thank you, thank you. What's good? Ibranith, Eric Mendez, Ricky, Marvelous, Edgar, Pop, Bell, Amin, Andy Flores. Yeah, Ricky, I'll get to the indices in just a second, because we got to talk about some things, some levels of liquidity. So I'll get to that in just a minute. What's good? Martin, Hermita, Jordan D, Zach, Zay, Beverly, Willow. I think that's everybody. What's good? Beverly, make sure to send me a DM on Discord. I'm trying to, and Martin, you too, Edgar, or whoever hasn't gotten their gift yet, who is a gold sniper on this channel, send me a DM on Discord, because I got to get you your gift for being a gold sniper. Okay? I got to do that. I mean, you don't have to. If you don't want it, I won't give it to you, but I think it's cool, so I want to give it to you. What's good, Grauberg? Let's see. Willow made it back this morning, up 2%. We locked out just here for the edutainment. Oh, thank you. Appreciate that. Was away again on vacation in Australia, but still did my homework and almost read an entire book. See, that's what I like. That's what I like right there. That's what I love to hear. You know what? We can go over gold first. I'm fine with that. I'm fine with that. Yesterday on the live session, I told you to screenshot that on a 15-minute time frame. Right at the tail end of yesterday's live session, we were like right in here. I said there was an imbalance right there. There's a gap right there. I said to screenshot that. Maybe you did, maybe you didn't. You probably didn't, because y'all don't listen to me at all, so that's fine. But we stood there for a while, and then we did trade lower and made a new low. So there was at least, some, like, I was right to a degree kind of thing. Like, we did go lower. We just didn't go for the lows, right? So we came all the way back up, and then I don't trade anything. Like, once the day is over for me, like once the stock exchange is over, I don't do anything anything after that. And so, of course, what did we do? We actually trade higher, cleared all these lower highs together, and then ran for the lows. So the word sassy comes to mind when the market does this kind of shit, where it's like, yeah, we're gonna go lower, but then it runs higher, clears out all these levels of liquidity, and then rolls lower. But that's what the market does, bro. Before it goes lower, typically goes higher first, right? And so that's what we see. Well, that's what we saw, rather. And then very, very manipulated. If you don't know this has been my opinion for many, many years, probably like 5 years now. I firmly believe that the most manipulated market is gold. I cannot show you a market that is more manipulated than gold. XAU. I think it's disgusting. So, and this is where you're supposed to take notes, by the way. Let's get Eduardo. I think gold is the most manipulated asset there is. That's what I believe based on 10 plus years of experience. Okay. Not that I've been watching gold every day for that long, but I look at gold all the time, and intraday is so manipulated. It is bonkers. And if the last couple of days haven't really proven that to you, then I don't really know what else to tell you. But just look at it. All those slightly higher highs in here were stop runs to go lower. And then for the short term, this was a stop run to go higher, which was only a stop run to go lower, right? In which we do trade higher, right? During London, we trade off of it, and then we run up one more time. So we saw like a double tap right there, right? One high cleared, and then the data cleared that high to then run lower. So very, very manipulated. But that's a good thing, because if it's the most manipulated thing there is, and again, that's just my opinion. Maybe you could find data that proves otherwise, but based on my studies, that's what I believe, right? But if I know that, if I know gold is going to be manipulated heavily, that's a good thing, because that's consistent. There's consistency there. If it's the most manipulated asset, I can expect manipulation. So if I can expect manipulation, then I can expect things like seeking liquidity, on the upside or the downside, whatever the case. Okay. And that's kind of where I'm at with New Zealand. We can go ahead and transition over into that. Okay. So we'll take a look at it. Actually on a 5-minute. Okay. So I said a few minutes ago, I think New Zealand, could trade lower, right? Why would I say that? There's multiple reasons. And that's kind of where a portion of today's lesson comes in. When we talk about liquidity, and I think I might have forgotten to put this in the video that I made like a year and a half ago, like specifically about liquidity and where it's at. So I think the one thing I did forget was data highs and lows. And I have told you that before, but I want to reiterate that again today, because we did have news at 7:30 today. Okay. So data highs and lows, CPI highs and lows, NFP highs and lows, maybe cash rate highs and lows, shit like that. So when we have that, okay, at 7:30 Central Time, when we have news, I'm typically not up for that anyway. And if I am, I'm like maybe 10 minutes awake. So I couldn't even tell you what my middle name is, because I'm not even awake yet. So I have to wait to see what that does. Oh, nice job, Edgar. I have to see what this does. Okay. And that's for every asset class, by the way. So that's what we're going to do. We're going to spend a little bit of time to look at that. Okay. So what we're going to mark up, and you should be following along on your own chart. Okay. Go into a 5-minute, 15-minute, or a 1-minute time frame, or whatever you want to do, 1 hour time frame, and mark up the data highs and the data lows on whatever it is that you're looking at, your favorite, all those stupid ass cross pairs and shit. If that's what you want to do. I'm just going to do some of the majors and the indices, and that's it. Okay. But New Zealand has what? Data high at 6028 and a data high of 6002. Okay. Now, what can you, I guess, why would I be interested in New Zealand? Why do you think I'd be interested in New Zealand? And I did mention in the Discord a little bit late. It was on this run lower. I was saying NZD has my attention. And, it is what it is. But I told you it had my attention. Why? Why would it have my attention? Naruto says New Zealand took upside liquidity, forming high resistant highs. I want to say is what that means. While on the opposing side, low resistant lows are still open. Right. So this is where TradingView fucks up. Other than them not bringing tweets back, I think that's absolutely absurd. But what else do you notice about that 6002 level? That 6002 level is not just the data lows, it's almost equal lows. That's why I think New Zealand could easily trade lower. Right? So look at what we did up here. We took the data highs, okay? And if that's how you want to label it, I think that would be beneficial. Like if you want to do data high and data low, or like if you want to do that and then make a preset, that would be fine too. Instead of having to type it out every single time, like I do. Okay. Took the data high, and then how did we leave it on a 5-minute time frame? How did we leave it? Well, pretty aggressively. Large down candles that formed what? We'll zoom in, right? How did we do it? Okay, there's an imbalance right there that was traded into. Barely. Right? Then there was another one right here. So if we want to be short and we have two imbalances, right? But the first one, meaning the higher one in this illustration, the higher one's been traded into. So the market doesn't have to come back into that. And you'll notice that. I've said that so many times that when you guys ask a weak market for a deep retracement, it's not going to give it to you. It's not going to give it to you. That first one's usually going to be left open or only traded into a little bit. The first one hardly ever gets traded into all the way. I'm sure if you looked for it, you could find some examples, but the majority of the time, it's not going to do that. It's going to barely trade into it, or maybe halfway or a little bit less than halfway, and then rip. And that's why I gave you the protocol for trading two imbalances. How do you trade two imbalances? There's multiple ways to do it. Now, for the sake of saving time, because I want to get through all this, one of the answers was you could trade the first one with the stop at the second one, like maybe the high end of it, or I don't know if I'd go all the way to that high. That's a little, your RR is going to be hot dog water. So maybe you could trim that down a little bit, right? And so what would that get you? If you were aiming for data lows, just right at the low, not even past it, just at the low, that's right almost at a 1 to 2. And that's not bad. Okay, it's not ideal, but okay, what's the next zero level below that? 0.6. 0.6 even. That's a 1 to 2. A little bit over 1. We'll say 1 to 2 and then plus like a little bit for spread. Okay, so that's how we'll look at that. Right? So that's what that looks like. And it does actually come into the higher end of that one. Right? But why would I label that red? Because that's a premium. Why would that be a premium? Well, look at it. Is it closer to this high or these lows? I don't know, John. That looks, that might be at 50%. I can't tell. Okay. Well, then use your tool. Okay. Don't be a fool. Use your tool. All right. So you can write that down if you want. There's your 50%. Okay. What do we do right there? At 10:25, what do we do? At 10:25 my time, we cross 50%, bucko. So what does that mean? That means the market has shown you its willingness that it's going to run for not just the data lows, but the equal lows. Oh, shit. So that's a short. That's a short. Maybe halfway. That could have been a short too. Right? What about this right here? Now, admittedly, this does look kind of shitty. But what happened here? High, low, higher high that took liquidity because that's the data high. So we trade below that. So what does this become? That becomes a kind of a shit version of a mitigation. Oh my God, the mitigation model. Imbalance within a mitigation in a premium on the way to some lows. Dun, 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 dun. That's why we should trade lower. But I don't know shit. I don't know what the fuck I'm talking about. I don't know a fucking thing. I'm just a fucking fraud. Right? That's all that I am. Just a big old fraud, dude. So that's what that looks like. So we're not there yet. We might not get there. There's still a possibility that I could be wrong, but that's what it looks like. Maybe you don't like the 5-minute time frame. Well, John, you know, I'm at work. I sneak off to the bathroom and I go into the stalls, even though I don't have to use it. And, you know, I'm on my phone and I can't really do the 5-minute time frame. But you know what I can do? I can do a 15-minute time frame. Well, what the fuck does that look like? Is there anything on the 15-minute time frame? You bet your fucking ass there is. There's an up candle right there, baby. Boom. Come on, dog. That candle right there at 10 o'clock. Okay. What did it do? That was the candle after a liquidity run, right? And it closed right below that up candle. Boom. That's a shift in price delivery. That right there is a 15-minute up candle and the 5-minute mitigation model. Okay. Right there. Bam. Easy. Easy, easy, easy. First leg. We never really get like anything that's like a low risk up in here. Maybe a 1 minute. I think Edgar had mentioned something. But that's basically the second leg to go lower. So what do you think we're going to aim for? What do you think we're going to aim for? If the market trades liquidity to liquidity, if we've taken the data high, what do you think we're going to aim for? The data lows, baby. 0.6 is right there. It ain't but 3 pips. It ain't but 3 pips away. This whole range is like 30 pips. It's nothing crazy, right? Very low risk. Very low risk stuff. Oh, there's the data low. Oh my God. Man. John comes on here and just gets fucking lucky over and over again. Yeah, man, this fucking ICT guy keeps calling him a fraud, but man, he kind of knows his shit, don't he? Nope. I don't know shit. I don't know anything. I just blurt shit out and get lucky repeatedly. Come on, dog. Come on, bro. I told you at the beginning of the stream, I think this is going lower. That wasn't but 20 minutes ago, roughly. And look at that. Just took the data low. So we'll see if we get 0.6. Right? Because again, that's just the nearest zero level. There's a lot of, I assume that, you know, there's a lot of institutional orders and whatnot around those types of levels, 6 even. Right? Why would they have an order at 6002? I don't know. But, you know, I think the 6 even, I think price should easily gravitate to that. Right? So that's pretty cool. So we'll give that a few minutes to see, because I mean, it doesn't have to do that like instantaneously. It doesn't have to print, you know, one fat ass candle to go lower. You know, it might take some time, and that's okay. But this was clean, bro. This was absolutely clean. Okay. Up candle right here. That does get traded into pretty aggressively. As in, like, it even traded to the higher end of it. But if the market is bearish, right, up candles should be respected. And this is very loose. I mean, it doesn't respect it entirely in terms of price, because the wick does trade at the high end of it, but the bodies do respect that. The bodies do respect that. And then look at that fucking candle right there. That look at that upside down cross right there. Does that look bullish to you? An upside down cross, right? Not that it's the candle by itself. That doesn't mean anything. But in the right context, it does. Should we trade lower? Yes. Is that a bullish candle? No. Okay. Whoop. Right down the data low. So anyway, what I'm going to do is set an alert at the 6.0. So, you know, that'll be kind of sitting there. And now I'm going to go over to the indices so we can, you know, fuck around and find out some shit. Okay. Same idea, same exercise. 7:30. We got massive board clearing, right? Clears. Let me just take a look. Clears some highs, clears some lows from yesterday in the PM session and London. So it clears everybody, right? It's coming in there and saying, it's giving the middle finger to everybody. We're going to take shorts. We're going to take longs. We're just knocking everybody out. Right? Y'all ever seen that? Oh, that's 19,000 even, by the way. That's fucking weird. Y'all ever seen that commercial or that, it's like a short video where that guy's in the backyard and a little kid is being disruptive. So the guy like slaps the little kid, and then the parents come over like, you can't do that. And then he just starts slapping everybody. And, you know, people keep coming up. He slaps them. He slaps the other dude, like the mailman coming in the backyard. He slaps them too. And he's just slapping everybody. That's kind of what's happening here. Okay. They're slapping everybody out. They're saying, get out of here. You're done. You're toast. Okay. Now, when that happens, right, remember, data high and data low. Okay. Data high and data low, because that might become important later on. Because 7:30 is what? That's not equities open. Equities open is an hour after that. So we're going to have a volatility injection at 8:30. Right? So in hindsight, obviously, because it's 12:30 and, you know, I'm not going to live stream at 8:30 right at the open, but you know what took place today? Just like New Zealand, we happened to just get the data high. We trade lower. What's the formation there? High, low, higher, high. That took liquidity. Okay, so there's a mitigation right there. We trade lower, imbalance. We trade lower, up candle, bam, right for the data lows. Come on, dude. Come on. Okay. This is the part where some of you are going to shit yourself. I know I say that a lot. I have an issue, obviously. Look at these. Right? What are those? Equal lows, right? Or low resistant lows. Okay, cool. Market trades up, retracement, trades up, and then slams for that, right? So if this is a stop run, what have I been telling you about the last few weeks? I've been saying, look at the imbalance that formed on the way there. Okay, there's actually two. There's a small one right here. That's very close to the low. So, you know, we do trade through that, and that one doesn't really become an inversion. It never trades into that. But you have one right here. Right? So remember, I keep saying Natasha, right? Because she's been the one that's been studying low resistant highs and high resistant lows. Okay, if those lows have been taken, that becomes what? High resistant lows. What are these up here? Right? What are those? Y'all remember that shit? Low resistant highs. Imbalance that wasn't even respected at all, that becomes the inverted imbalance below the data low, right? Look at that shit. Look at that shit. Right there. We trade higher, right past the low resistant highs. We had no problem getting there. Only a couple down candles. Classic low resistant highs. There was almost no resistance to get there. Oh, lo and behold, New Zealand, dog. Oh, man, what a fraud. What a fraud. He said 0.60 before it got there. Yeah, I don't know what I'm talking about. Right? If I don't want to go down like a long tangent, bro, but that's why I don't respect ICT. He's so ironic because he'll talk about people when he doesn't know what he's talking about. But he'll tell us, oh, John does this, does that. He doesn't know what he's talking about. If I didn't know what I was talking about, then why did I bring your attention to New Zealand on the way lower? Why did I point out the data lows and that 0.6? And that's exactly what we got. This is why I don't give him the respect. Because he's a fucking retard. I can't stand that shit, dude. Fuck him. I know what the fuck I'm doing. I don't win every trade. Don't get me wrong. I don't win every trade. Hey. But look, I come out in front of, there's almost right around 60 viewers. I come out here and I tell you, hey, I think this is going to happen. It fucking happens. More times than it doesn't. Because I do know what I'm talking about. And I prove myself every fucking week. Every week. Every week. Unless it's like Christmas or something, but bro, I wouldn't have memberships. I wouldn't be building a community if people thought I was fucking retarded. I might have retard tendencies sometimes, but hey, we all can be a goober every once in a while. But there it is right there. Bam, 0.6. So, respectfully, fuck that guy. Anyway, what were we talking about? The inverted imbalance, or the imbalance that ran liquidity, right? Or no, sorry, the imbalance prior to a liquidity run. My mistake. My mistake. That is an imbalance that was traded through. And that had the bullish imbalance inside of it. See that? Yeah, John. Oh my God, you show that all the time. All the time you show the bullish imbalance that has the bearish imbalance inside of it. And what is it respecting? Okay? I'm not going to call anybody out. Because I think a lot of times that is a lot of bullshit. And it wastes people's time and energy. But who else do you know that came out and said, yeah, look at the areas that overlap? Who the fuck has told you that? And that's a serious question. If anybody's ever told you to look at the overlap and highlighted the overlaps for you, that's fine. Let me know. Because I don't know anyone that has done that. I have came out and said, yeah, look at the overlap of the two imbalances together. And that's where price is responsive. Look at that right there. Look at that. It barely trades into that. That's a 1 minute time frame. It barely taps into that. And it fucking launches after that. Bro, Elon Musk should like hire me, dude. Look at this shit. That's a complete and utter launch. Come on, bro. Elon Musk would be proud as fuck. That's sexy. Now for the rest of the day, just like what was it? Today's Wednesday, right? Yeah, it's Wall Street Wednesday. So just like yesterday, I don't know what the PM session wants to do. Because why? Again, we are back within the range. We have cleared the board multiple times. We have higher highs, we have lower lows, and we're roughly around 50% of today's range. That's why I said we're roughly around that, right? When does price consolidate? Or the better, I guess, question is when does price, why price consolidates, where it consolidates, fuck. Okay, where does price consolidate? Right around 50%. And that's what we have here too. When we have this, I don't know what the market wants to do. Right? Some people come on here and, you know, they think like, oh, we're going to take a live trade. Dude, I'm done. New Zealand hit exactly to the exact T of what I wanted it to get to. What else is there to do? This looks like, I don't know what to do with this. Let's go look at yes. Okay, same exercise. Data high. Data low. All right. Is there a difference here between the indices? Hold on, John. Something doesn't really look right. Something's kind of off. I can't tell what it is, but something is off about these two. Right? What's different about that? Oh, well, shit, this doesn't make sense. Wait. Okay, no, I get it now. NQ traded higher. NQ went for the data highs. ES did not. ES did not run the data highs. So what does that tell you about NQ? Especially because, Christ, look at that 5-minute time frame. We traded up right above that high and then slammed lower to close. What does that look like to you? That right there, I've told you time and time again, and it's in my book. My best-selling one, by the way. #1 on Amazon. Motherfucker. Okay? That's manipulation. I told you that. Right? That's when you can go into the smaller time frames. You know, because you know the high's been set, at least in the short term. And the rest of that. With ES, okay, it's the same thing. We have some highs here that it does clear, but it doesn't clear data highs. That's okay. We still shit the bed. It still shits the bed. And then guess what? It forms the same thing. High, low, higher high. That was the leg that displays weakness. So that becomes what? The mitigation model. Imbalance inside of mitigation on the way to what? Well, we don't really have equal lows. We don't. And that's why I'm giving you this lesson today of the fact that there is what? Liquidity at data highs and data lows. So what do? We trade off of that. We rally up. We come back into this mess. We trade lower. We rally. Up candle here. We drop down. There's an up candle right there. A little retracement. And then we rip straight for that. Boom. So what would that look like from a RR perspective? Well, hell, even if you said, man, fuck the imbalance, I just like the mitigation. All right, I ain't gonna knock you for it. There's your 1 to 2, and maybe like 1 point lower or 2 ticks lower. There's your 1 to 2. There it is right there. Even if you took a little bit of drawdown. Okay, imbalance, same thing. Imbalance right there, stop at the high. There's your 1 to 2.8. Just for hindsight purposes, there's your 1 to 3 because it trades 5 ticks below the low, which is 1 point and then 1/4 of a point. That's all you would have needed right there. There's your 1 to 3. Okay. Now, admittedly, bro, this is Yeah, Lee Bright and I are in the same boat today, dude. And I missed this right here. And that's why I posted it in the Discord. Okay. The 1 minute imbalance that was created on the way lower for NQ, the lower one was not traded into after it was disrespected. And that might be a lot to follow. And I'm sorry, but it is what it is. And ES did. Okay. Lower, or excuse me, equal highs. Okay. ES, equal highs. Low, high. We trade lower. This is where NQ had equal lows. Okay. But that's still short-term liquidity for ES though. Because everybody thinks, oh, that's a bounce, right? Oh, there's your break of structure. Right? Oh, yeah, there's your break of structure. Well, fuck, I'm going to buy this mitigation. You get their ass clapped. Well, why is that? Man, that's a shift in market structure because you don't fucking need that bullshit. Break of structure is the most overrated thing there is, and I will stand by that. I'll fucking die on this hill. I will die on this hill. You do not need a break of structure. What you do need is a shift in price delivery. That's what you need. Okay? Imbalance that formed on the way, right? Liquidity run. We trade into the high end of it here. It respects it. But then guess what? 938, we close above it. We close above it. So what's that mean for 939? That would be an NCE. That is a next candle entry right there. Now, even though I already gave you New Zealand, I told you exactly where it's going to go. It went exactly there to the pip. Just to show you that I'm a flawed man, that I'm imperfect. Okay? I'll show you the flawed side of John Fibonacci. Okay? As soon as we traded lower into this, my finger was on the trigger. I had to buy a market order. I had my the clicker, the mouse arrow. I had it on the buy button. My finger was on the mouse. I didn't long it. I was like, you know what? I'm gonna wait for something a little bit better. I'm gonna wait for something a little bit better. And then guess what? I didn't get it. And then this candle said, all right, John, you're not in it. All right, well, watch this, bitch. Boom, it rallies. I'm like, oh, Christ, I missed it. So then we came back into this. And in hindsight, this would have been solid. And I hesitated and I missed it. So I'm not perfect, okay? And I don't want to make it seem like I am because I'm not. So what am I admitting to you? I missed this. I missed it. I fucking saw it. I saw everything. I'm like, there, it's going to 54, 58. I'm like, it's going there. Has a low been set? Yeah, I fucking think so. All right, well, there's your imbalance. Okay, bam. That's it right there. Hesitated, didn't do it. Watched it fly. I said, okay, cool. This is kind of shitty, right? Because what does this show you? This retracement right in here, what does that show you? Okay, there was a episode 19. Pipaholics Anonymous, please trade responsibly. Probably one of the best titled streams I ever had. But I told you what, that the market is like a pair of lungs. It will expand and contract, right? When you see large up candles, small down candles, that's what? That's expansion, obviously. That's contraction. Is that a bearish market? Because it printed a few down candles, is that bearish? No. No. We know the market gravitates to what? Equal highs. Are you going to short with equal highs? No. No, you wouldn't do that. Well, you might. But if I'm talking to myself, no. Absolutely fucking not. There's your overlap of a bullish imbalance and the bearish one. Even though the bearish one was kind of respected. But either way, goes into both of those here. Just like Nasdaq. And then we launch right for the highs. Okay? And that's that. But remember, now I didn't anticipate this because I would have said something in the Discord if I did. But if you'll allow me the benefit of hindsight, because I've already finessed today in front of the public ahead of time, the data highs were never taken, right? That's what it reaches for. So from the 1 minute inverted imbalance, which you have been studying, because I've been harping on that every stream the last, I don't know, a couple weeks or so, however long it's been, right? That was the trade. That was the later trade. Maybe this down candle here, that's definitely too late for me. But if you had the larger time frame perspective, that's not late. And we fly straight for the data highs because it wasn't taken earlier. All right. And then what do? We come right back in the range. So those were the opportunities for today on New Zealand, on indices, even on Dow, dude. Even on the Dookie Dow. Right here. Okay, imbalance right there. Trades through that. Gets into this one. We trade through that one. Okay. Now, oh, the micro side. That's why. So this is what's a little bit weird to me, and you've seen this before too. And that's why I posted the micros on the Discord and not YM. I posted the micro YM because the micro side had equal highs. And we took liquidity at 935 the same way that Nasdaq and ES did, right? Imbalance here that formed on the way there. Okay. That was respected a little bit and then it blasted through that, right? What is it gunning for? Right? It's trading higher and going for what? The equal highs. Are we going to long on the way up? No. Can we long on the way down? Absolutely. So there's your inverted imbalance right there. Right into that. We trade higher. There's a gap right there. We trade higher. Down candle. It's a shit down candle, but nonetheless, we trade into it and then launch for that. Easy. So they all did the same things. Okay. They all did the same things. Except for Dow. Sorry, I lied. The Dow never went for the data lows. So that could be seen as accumulation. Right? Let's go back. ES taking data lows. NQ taking data lows. YM leaving the data lows open. That should be a signature of accumulation. So then the inverted imbalance becomes even fucking better because that's accumulation. That's the next retracement right after a stop run and right after a higher time frame accumulation. Buying strength, baby. Buying strength. Okay. So, you know, anybody can say whatever they want, but either I know what I'm talking about or I don't. I'll let you decide. Okay. Think independently. You fucking decide. All right. Yeah, Leroy, my finger was on a trigger too, man. I just hesitated a little bit too long and, you know, I missed it. So why do you think I was over in the New Zealand market? I was like, fuck, I'm leaving here with something. Okay. I'm leaving here with something. So that's why I went over there. Naruto was going to the toilet. You got to put a TV in your bathroom, my friend, or get a iPad. But it's happened to me too. I've missed trades because I had to go to the toilet. It's all right. Sometimes you miss trades. I mean, yes, I'll do that. I'll go over the shift in price delivery one more time. Just for you. No, Stephanie, I got shorts on today. Actually, I do have shorts on most days now, but a lot of the times, yeah, I just don't. Just, you know, sniping in your underwear. That's why it's a thing. That's why I made it a thing. So And yeah, Jordan D, look, that's why I try to make that a point. I am right a lot. I'm right a shit ton, but I'm not right 100% of the time. And I do want to make it a point, excuse me, to show you the flaws that I have. Right? Remember I told you to screenshot gold, and we actually went higher before we went lower. So, you know, if you want to look at that as being wrong, that's being wrong. Even though we did make a new low, which would be a partial, but nonetheless, I wasn't entirely correct in the same way that I did New Zealand. So I'm not perfect, but I definitely know some things. So Natasha, I do. So there is one thing I'm going to show you as well. And this is why we look at things like order flow. Okay. The easiest example I can give you is on NQ. And this is why I tell you guys to study the multiple opportunities. Okay. Earlier on NQ and ES. Okay. I walked you through this from the high all the way down to the low, right? In hindsight, I walked you through this because I'm telling you, I'm showing you that you can enter quote unquote late. Okay. Shorting above old highs, that would be the very first thing. I don't do that anymore. I used to do that a lot. I don't do it anymore. Okay. That's the first thing. Okay. I don't know where that 5-minute closure is. Give me a second. That was at 8:30. Oh, fuck. That's like right at equities open. $35. So that 5-minute closes here. Okay. So starting at 8:35, this would be an NCE on the 5-minute. So I wouldn't just YOLO short at the open of the 5-minute candle, usually, especially on NQ. Oh God, you know, I don't even want to get into it, but that's an NCE on a 5-minute time frame. So that's opportunity number 2. Okay. So again, shorting above old highs, that's 1, right? That's opportunity number 1. The mitigation is number 2, or the NCE could be like number 2 or 3, depending on how you want to count it. This imbalance right there. Oh God, that's horrible. The imbalance here, right, is on the way to what? It's on the way to data lows, which is on the way to liquidity. That's the imbalance model after a cross of 50% of this entire range, or this range up to that high. That obviously crossed 50%. Okay. Cross 50% there and here. So that's a premium mitigation. That's a premium NCE. And this right here is a premium imbalance because why? It's above 50%. So 1, 2, 3. That's at least 3 opportunities. This imbalance could be number 4. Now watch this. 847, that imbalance is respected. So the next candle, that could be an entry. That's entry number 5. Entry opportunity number 5. This candle, 849, closes above this one. That's an up candle. That could be number 6. We trade lower, retracement, lower, retracement. I don't trade this late, by the way. Up in here. Like this, I wouldn't have shorted that. Okay, I wouldn't short that. But that could be number 7. This up candle, imbalance here, formed on the way lower. That up candle right there, that could be number 8. What about that being respected? So the next candle, that could be number 9 to go lower. So there was at a minimum, the way that I look at it, there was 9 opportunities to short going lower. I almost never trade the first one anymore. That's been exiled, okay, from the way that I trade. I just don't do it. I don't do it. Number 2, 3, 4, 5, and 6, that's where the meat and potatoes is at. For me, again, my opinion. If you think there's 10 opportunities or 20 opportunities, I'm not going to, argue with you about that. Okay. And that's fine. The way that I view it, there was at least 9 opportunities, right? But the best ones, meaning if I want the biggest move, right? The short, if you will, I want to short as close to the high as possible. So that's why this mitigation and that 5-minute NCE, that's available because we're above 50%. So these are good entry areas. This one is a little bit last minute, but it's still a good area, whether it's in the imbalance or just after the imbalance. It's just the longer you wait, remember I said this before, the later you wait, the higher probability it is, but the lower RR, the smaller the move. Okay. So this is still high probability, and that's what offers the biggest move other than shorting above the old high or shorting the next candle entry after that high's been taken. Okay. So there's one or two up here. The mitigation here is the opportunity that to me is low risk because you're framing a trade that, let's go back. You're framing a trade idea that is low risk, high reward, right? 1 to 2.5 or a little bit below that. Maybe you went for the 80 level. I'm sure Ricky probably saw that, right? 980, 80 level below data lows, right? That's almost a 1 to 3. Okay, that's fine. Or even something like at the high of that up candle, the close of the up candle, excuse me, the high end of the body. Okay, that's a 1 to 3.8. That offers low risk, high reward setups. It's a little bit more probable for me on the way lower, like this imbalance. That's still in a premium, right? And that's still pretty good, in my opinion. But what I like to do is I like to trade an opportunity that gives me the probabilities of capturing the most, right? I want to capture a nice move. And honestly, you don't even need all that. You could have said this new low here or that mitigation to this new low here. You could have just taken a small 1-to-1. All right. That may not be a 1-to-1. That new low, like one tick below the low, that's a 1-to-1. You could have taken that, and that could have been a good day for you. And maybe you didn't trust it. Maybe you didn't trust, oh man, fuck, dude. We're going to hold for what, over 100 points on Nasdaq? Man, that's a lot. I don't know if I can hold a trade that long. I don't know if I can predict moves that big. Well, pay attention, my friends. You fucking can. Because if I can do it, you can do it. If I can do it, you can do it. So it might seem scary at first because this is all you see. This is all you're looking at. You're going, oh man, this is kind of weird. What is this bullshit? Well, it's not bullshit. It's data, and there's going to be stops at data highs and data lows. And if the highs have been taken, where's the only other way it could go? Lower. You're stacking probabilities. That's what you're doing. Okay? Anyway, Natasha, I say all that to say you might have missed, maybe you wanted this imbalance right here. Maybe you wanted that one and you didn't get it. And price takes off without you. Is the move done? No. Okay, you can enter a little bit later. You can enter on that. Okay? That's my opinion. I'm not a financial advisor, but that's my opinion. Is that I can look to enter a little bit later if I missed this. Okay? And yeah, Grauber, I'll get to that too. Lee Bright, oh my God, Lee Bright said, all my TPs are now 100 points, John. Sheesh. Well, that's why your community is like $3 million in funded capital, isn't it? That's disgusting, my friend. That's disgusting. That's absolutely bonkers. And I'm all for it. You know what? I'm not going to do this today. I'm not going to look for this, but the Dow Jones does have some low resistant lows at 40,012. I'm not going to trade that, but that is, oops, that's probably something I would watch for in case it wants to do that. But these are low resistant highs for ES and some low resistant highs for NQ as well. So this might not trade lower, but I wouldn't be surprised if it comes back for that. So let me just show you one more thing, my friends, and then we'll do the knick-knack paddywhack. Oh, look at that, 59.90s. It's a measured move. So 6,002 minus 5 would be what? 97. 97. That's a measured move below the low. Below the data low, by the way. Not below 6. So yeah, that's pretty fucking cool if you ask me. All right. So there's multiple ways. Okay? There's multiple ways. Actually, I'm going to clip it. This is going to make a really good video. Clipped video anyway, not a full-length video. There's multiple ways to identify a shift in price delivery. Okay? We should know by now that the markets, they shift from bullish to bearish. Obviously, price goes up, price goes down. Easy. The hard part is identifying, as a beginner trader, it's trying to identify when we have shifted from being bullish to bearish or from being bearish to bullish. Okay? Now, this is, and again, there's multiple ways to do this. I've already shown you one, which is the imbalance. The imbalance prior to the liquidity run. Once that's disrespected, if that's a real liquidity run and it's a real reversal, that imbalance will become an inversion. That's why I told you to study it. And that's why we've been looking at that over the last few weeks. The other shift in price delivery, most of my students know this already. For the gold snipers, at least, that have been here for a long time. Okay. This up candle, right? I already pointed that out earlier on the stream. But remember, data highs on New Zealand, 6028, 6028. And the data lows at 6,002, 6002, right? This candle at 945 trades above the data highs, closes off of it. Now that by itself isn't enough for me. I mean, I do like that it closes off of that. That's one of the signatures of a stop run. Look at this candle here on a 15-minute time frame. This candle trades lower and it closes below this up candle. You see that? Next candle trades lower, right, and closes. So this up candle is also part of what? This is one of the oldest lessons I've ever done. Oh, fuck, that looks bad. This is one of the oldest lessons I've ever done. One of the first ones I've ever done. Okay. Up candles that form fractals. Okay. And most of you should know what a fractal is. It's a 3-bar pattern. Okay. Where the candle in the middle has a lower high to the left and a lower high to the right. Okay. Do you see that? The candle in the middle has a lower high here and a lower high here. This is a fractal formation. It's 3 bars. Now, if that 3-bar pattern were to be part of a stop run, i.e. manipulation, okay, then that's even better. Okay. So that formation is here, right? The candle in the middle, right? That's why I put a triangle here, because it's a low on both sides. Did y'all ever notice that? Did y'all ever notice that? The formation here, right? The candle in the middle is the highest one. That's the triangle. That's why I made it the triangle. That wasn't a random, phenomenon. There's a purpose to that. It's labeled just like that because it's a fractal high that also took liquidity. This candle here closes below that up candle. That right there, as soon as that candle closes, that's your shift in price delivery. That's your shift in price delivery. So guess what? That up candle is not bullish. It's bearish, right? Look at the sensitivity on that. We're still fucking going lower. We're still going lower for New Zealand, right? The luck continues. Consistently lucky, if you will. That's a shift in price delivery. Okay? And that's what that looks like on a 5-minute time frame. It's that candle right there, because that was the 15-minute candle here, right? This candle, that candle, and this candle, that is the 15-minute candle, because you see how that candle right here on the 5-minute closes below that high? Those 3 candles here put together make up that 15-minute candle. Okay? And the 5-minute by itself also becomes a fractal high too. Not that I really wouldn't pay attention to that, but the 15-minute is what does it. Okay? So when you have that opening price of that 15-minute candle, to me, that's enough. But if you look for other things, like I've already explained here, like the imbalances, right, in a premium, or like the mitigation, for example, as part of it, do you see why there's confluence there? Or I mean, do you see why that's high probability? Because there's confluence there. Shift in price delivery on a 15-minute time frame. That's why that up candle is responsive. Okay, that's why it didn't go all the way up here. Okay. Oh, well, that's the up candle, before the down move. And it never gets close to that. It never gets close to that. But it trades right into that cluster here of what? The imbalance, the mitigation, and the open of that 15-minute time frame. That's why price doesn't give you. Weak markets don't give you deep retracements. I've said that time and time again. Weak markets do not give you deep retracements. And it doesn't. And it didn't. Okay? So if you're looking for the most simple idea, if you're looking for the most simple, John, I don't want all that other bullshit. I just want the shift in price delivery. Okay. There it is. That's what it looks like. That candle here is closing below this up candle. So up candle, massive down. I mean, it could even close a little bit lower. It's relative. The value judgment, it's a little bit or a lot. Depends. But that's what it is right there. You could draw, anybody could draw that on a sheet of paper. That candle closes below the up candle. That's it. But it's better when there's other things involved, like liquidity. Okay. So do we all know that there's at least two ways, the two ways that I know of, okay, of identifying a shift in price delivery? And we didn't even discuss like relative strength, not in this clip, but in other, on earlier in this live stream, we did talk about Dow not running the data lows, but ES and NQ did. So even though Dow didn't trade below the data lows, that still showed accumulation. So that imbalance on the way lower, that was the shift in price delivery. And those are the two ways that I know of. There could be more. Right here. Okay. See that? When price is bearish and it took liquidity, and now bearish concepts aren't working, if it's not bearish, then what could it be? If it's going to seek liquidity, right? Because this was equal highs on the micro side. If it's not bearish, look at that candle at 940. That candle rips right through that. We've shifted. It was bearish. It ain't bearish no more. Then the inversion is expected to go higher. Okay? So it's the candles that I showed you already, and it's the imbalances that both show you a shift in price delivery. Okay? So drop a one if you guys are good now. We're all on the same page. We know two ways to identify a shift in price delivery. Drop a one if you guys are now we're all on the same page. We know exactly what to look for. We know the definition. We know the examples because you've been studying them, right? You've been studying the things I've been telling you to study. Yes, John, we know. Okay, great. So anyway, that'll be it. We went over a little bit today. We went over by like 15 minutes. I'm fine with that. I try not to go above an hour because a lot of the attention span, people start to stop paying attention after an hour. So that's why I try not to go over too much, because I know people are like, he's doing this, he's doing that, or you start scrolling on your phone and all that bullshit. You want to watch cat videos and whatever, which I'm not against. I watch them too, but there's a time and place. Okay. There's a time and place. Lucas says, I feel that, and thank you, Jordan. I appreciate that. I feel like that in the indices, it's mostly 1 minute setups and 1 minute liquidity pools. Do you agree? I don't understand your question, Lucas. Is that what you're focusing on, or that's what you think I trade mostly, or what is? I'm not really sure what the question is here. I get the imbalance method prior to the stop run, but I'm slightly confused on the other candle method. Well, I mean, then you just got to study, bro. You're just going to have to study and give it some more effort. And this is why, the market reviews, when I point out certain up candles or down candles, you know what? I mean, I will put that in my notes. Okay, I'll write this down. I will try to include some more examples of a shift in price delivery in the market reviews for you. But I've included a lot of them in the history of the SMS community. And I will put out this video a little bit later. I said I was going to put out the Dow recording and I didn't do it. I guess I still will, but I clipped it. I have to edit the video, obviously, and then I'll post it later today, or I might set it for another day. But you now have it. You now have notes. Now you just got to study, my friend. Thank you, Andy. Appreciate that. See that by no accident shall any other stranger as powerful as himself find an entrance here. ICT's strategy for attacking / trying to discredit John interpreted from the Prince. Oh, that's Machiavelli. Yeah. The guy, he has his moments, man. And he said it before, you know, he'll go off and do all that weird shit because he's a chemical imbalance in his brain or whatever. So I mean, it's fine. I've had conversations with him before. I told him to go read a fucking John Maxwell book because your leadership sucks. That was many years ago, but it's fine. It's not a big deal. You know, people are going to be who they are. And once you're like 50 or in your 40s, you're pretty much set in your ways. So it's fine. But I do think irony is funny. Because he called out Dodgy today. And Dodgy did like a reaction video and I commented on it. But, you know, Dodgy, he said the same thing. He's like ICT would say something about Dodgy. And then Dodgy would be like, I never said that. And I'm like, yeah, welcome to the club, bro. Like, now you know how it feels. But I told him, this is all on Twitter. You can go look at it. I basically said, look, bro, I learned over the years that him calling people out is just a sign of respect. If he really didn't like people like me, people like Dodgy, or whoever else, all the Twitter traders, if he really despised us like that, he wouldn't even talk about us. He wouldn't, not us as in I'm a Twitter trader, because I'm not, but I'm just saying in general, if he hated people like me and Dodgy, he wouldn't even bring it up. It wouldn't be worth his time to mention them or myself, but he does. You know, and this might sound a little bit egotistical, and I don't always like being this way, but I will tell you the truth though. I live rent free in a lot of people's heads. It's always been that way. Teachers, exes, apparently trading gurus. I live rent free in a lot of people's head. I don't know what it is about me. I really don't think I'm all that special. I really don't think that. I sometimes I can be a little witty. Sometimes I think I'm funny every once in a while, but I'm not a genius. I'm not the smartest person you've ever met by far. And that's the honest truth. There is nothing inherently special about Jonathan. I don't see it. But for some reason, a lot of people do. A lot of people are like, man, that is a good fucking guy. Or, you know what? We're going to talk shit about him, but we're going to give him a platform. We're going to give him book sales. Okay. I don't know why you want to do that, but I'm all for it. And that's why I tweeted as well. The more you focus on drama, the more you focus on bullshit, the less you focus on yourself. The less you focus on your skill set. I can come out here and I can trade. I can come out here and tell you where I think the market's going to go before it goes there. I can do that. I'm not afraid. If I was afraid, I wouldn't live stream 4 times a week for free. That's like, how many stream? Let's do some fucking math real quick, dude. Fuck this bullshit. 4 times a week times 52 weeks in a year. That's 200 streams for free a year. That's 208 hours of me telling you what I think the market's going to do before it does it. And we've done this for a year and a half. So 208 times 1.5, that's 312 minimum. That's 312 streams that I've done for free in front of the public. So maybe that's special. I don't know. But from like the personal side of me, dude, ain't nothing special. I just like trading. Actually, I don't like trading. I fucking love trading, dude. I love this shit. I love this shit. But all that extra other bullshit, oh, he's a fraud, his book blows, all this and that. You know what kind of people talk shit about that? People who sell courses, right? Like the MMXM guy, Goober. Oh, John, that's just a cash grab. Well, my book's $36 and I don't run ads and I never promote for it. But you're selling a $275 PDF? Yeah, suck my dick, dude. You're a fucking joke. Sorry, ladies. But like, no, real shit though. Like, these people are so fucking retarded. That's a cash grab. Okay. Sure. Yeah, that's a fucking cash grab. You're right. $36. I only see a third of that. I only see $10.50 for every sale. That's not a cash grab. You don't know what the fuck you're talking about because you're not an author. I am. Stupid. It's not very stoic of me to be all like an asshole, but these people are just so ironic, dude. You're selling a book. Well, your PDF is 10 times the price of mine. The fuck are you talking about? That's why I don't engage with these people, dude. Sometimes I do, but I try not to. I try not to engage with these people because of shit like that. Right? And then imagine me getting caught up in some more drama. Oh, John said this, ICT said that, MMXM said that, this person said that, da, 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 da. And that takes away from all the things that we're trying to do as mentors. You guys want to learn how to trade. You guys want to learn how to predict price action. You guys want to learn how to find out where the market's going. And the more we don't show that, the worse it is for you. I got into mentorships because I was asked to do mentorships. I was begged for years, hey, John, teach me how to trade. I'm like, no, fuck that. I don't want to do that. I don't want to do it. I don't have time for that shit. And then eventually I caved in and said, okay, cool. I'll start teaching people how to trade. I'm not like these 18 or 19-year-olds who came out, oh, I can make a lot of money selling mentorships. And yeah, you can. You absolutely can. Signal services or whatever. You absolutely can. But I never got into it for that. I got into it because people asked me to. I got into it because look at people like Liquidity and look at that community, $3 million in funding in the last couple of months or so. That's why I got into this shit, because that's real shit. Liquidity and all the traders from Haiti and wherever else their community is from, those people don't focus on the dog shit. They don't focus on that, oh, who said this about so-and-so, oh, this is a course leak, or oh, this, that, and a third. No. They're going, you know what? We got to study this shit so we can get it locked down, baby, because we want to make some fucking money. That's what they're in it for. And that's why they're winning over there, because they don't focus on the dog shit. But ever so often, people like dragging, my name around or whatever. I've always been popular, dude. Even though I tried not to be. High school was the same way. It's because I dated a girl that everybody wanted. Right? Not everybody, but I mean, she was pretty popular. That cheating ass bitch I tell you guys about. And it's like, oh, who is this kid? Who the fuck is Jonathan, right? It's like, look, I'm not trying to be Mr. Popular. I'm just trying to have a good time. You know what I mean? So I won't go further than that, but it's just like, hey, I'm here to have fun, baby. And y'all want to, oh, this, that, and the third. Man, fuck all that, dude. Learn how to press buttons and make money. And stop all the fucking garbage. Go read a book. And yeah, Lucas, I do write about that too, by the way. You're always the villain in someone else's story. Oh, absolutely. People pretend to be victim all the time. All the time. It happens all the time. And you know who victims blame? People like me. People like me. Well, guess what? I don't have a fucking job, bitch, and you do. So, who's the real fucking winner here? So, how about you shut the fuck up, clock in, and go to your job? You know what I mean? I don't do that. I sit here in front of these charts. I sit here in front of you guys. So, you can blame me all you want. You can be a victim all you want. I'm going to live my life. And I'm going to be fucking happy about it. So, I really don't like being like this. I really don't. I don't like shitting on people because it's not helpful. And it makes me look like an asshole. And I don't really feel good about it after a while. I really don't. But if you're gonna play with fire, don't bitch that you got burned. If you don't want the heat, stay out the kitchen. And it's as simple as that. John this, John that. Whatever, dude. That's why I can come in here and fucking damn near rape these markets, bro. I can come in here and just fucking rape this shit. Maybe not every day, but look what we did on New Zealand, dude. Come on. I can come in here and make these markets my bitch. And I like that. But I want that for you too. Why do you think I'll give you an hour of juice? Which imbalances to use? How to know that the high's been set? What a mitigation looks like? What a change in the state of delivery looks like? What inversion, imbalance, and all this and that? What's the target? How's the lows been set? I give you all of that shit, dude. For free. And then I'm like today, I haven't gone on a rant or a tangent in a long time. So I figured today might be a good day to do it because I've already given you all the juice. Everything else is extra. I don't talk a bunch of shit and try to give you the juice in between. Like Michael. You're just wasting people's time, dude. Wasting people's fucking time. So, anyway. I gotta eat something, dude. I gotta have some lunch. So I feel like it was a pretty good session. Minus all the my last 30 minutes of dog shit, but sometimes, I don't go after fame, but sometimes fame comes after me. I can't, it's out of my control. So, anyway, I totally did not read most of the chat. Yeah, appreciate that, Stephanie. I love you guys as well. Having anger towards everyone reaching success equals haters. Yeah, I agree. I agree. And that's what's weird too, is that people who claim to be successful are still upset at other people. It's like, if you're successful, why are you angry? If you're so successful, why are you worried about what everyone else is doing? That's questionable. That's a little bit questionable. And yeah, JB, I just try to mind my own business majority of the time. Majority of the time. But people are always looking for engagement, dude. People are always looking for engagement. I'm not. So. Yeah, anyways, y'all be good, man. Y'all be blessed. Don't do anything stupid. And we'll be here same time, same place on Friday for the last live session of the week. Tomorrow on Thursdays when I'll put out the next market review for you guys. Okay. So I have no idea what the indices want to do here. It looks like we have some low resistant highs that NQ is looking to grab. ES probably going to do the same thing. And Dow kind of has it, but Dow has some lows too. So I'm not really sure what I would do here. Probably best to just not trade. So I'm going to go have lunch. Y'all be good. And see you guys on Friday.